Good morning. It is June 29th, 2022. I'm Eric Sapanik. I'm here with Steve Rand. This is the Gold Spot. So we were reminiscing together about the fact that we kind of figured out we're getting a little bit older because we have both been in this industry now for nearly 20 years each. Steve and I started in this industry together, and one of the things that we were reminiscing about was the 2008 housing crisis and how today reflecting upon the '08 crisis and the similarities and the differences between that. Steve, if you could elaborate on some of the things we were chit-chatting about.
Well, I mean, number one, the market environment was very different then. We had very high interest rates compared to today. We were sitting over 6% interest rates. So the Fed, when this all happened, the Fed had a lot of tools to be able to maneuver, to be able to stimulate the economy and get things going again. 6% interest rates plus then, and right now we're coming off of 1% interest rates, and we're making very, very small adjustments. They can't go down with interest rates like they did before to be able to stimulate that. They're actually starting to go up the other direction, which is very, very different. Our debt at that time was $8 trillion.
Yep.
We're sitting at $35 trillion as they've poured all this money into the economy over the course of the last almost 2 decades now. And then the other thing is inflation. We didn't have inflation back then. The inflation rate at that time was 2.5%. We're sitting at 8.5% right now officially. But if you go back and do the numbers based upon how 1980 was calculated, how we used to calculate it, when you put things like housing, food, energy into the equation like we all use, we're sitting at over 18% inflation according to those numbers. So things are significantly more challenging than they were the last time.
Some of the most troubling was definitely our business has always been geared around a lot of times baby boomers or people that were coming closer into retirement age, and one of the reasons why is because people tend to buy gold for security. They're just worried about the longevity of it and making sure they've got something that's stable, and they're not really trying to hit a home run and try to become rich overnight. They're just trying to preserve their wealth. So that's always been a very big gear for our clientele. Well, what we started experiencing was people that had so much money in the Dow Jones or their 401ks, and literally just boom, they got wiped out over 50%. Some of them lost upwards of 70% and found that they were planning on retiring like a year later, but they couldn't do so because the game completely changed right in front of them. Like trillion is now the new billion when it comes to just handed out money. And how has that affected our recession this time, Steve?
Well, if you look at what's going on around the world, central banks weren't ramping up their gold reserves like they were, in 2008. They weren't even looking at that. Now all these central banks are trying to get the more gold in their reserves so that they can be able to try to get a bigger slice of the world's reserve currency and try to stabilize against other foreign currencies and volatility. On top of that, you've got things like the big bullion banks that are putting a lot of pressure on the gold market right now and trying to hold things down because they can't physically deliver on that gold like they used to be able to do. And most people don't ever take delivery of those contracts. So that's making them put more pressure on the gold market by selling off contracts. And what it ends up doing is it ends up causing a lot of volatility in the market. A lot of people start to get a little bit more skittish. And remember, when we saw this in 2000 and the stock market started to come down aggressively, the Dow went from 14,000 down to 6,500 points. But gold didn't take off immediately, did it? I mean, initially it was at 1,000, and then it came down to 750, and then it roared right up in a big spike up to 1,900 an ounce. And if you look at inflation right then and now, obviously that would equate to a much larger number if we were in today's terms today.
One of the other things that Steve and I have a big interest in is we both really like the show Peaky Blinders. And when he's talking about crypto and the Dow and all that, one thing that was interesting to me is the very last episode. She said one of the gypsy ladies was trying to get money, but she wanted only gold. And she said something that I thought was really good. She said, in uncertain times, the only certain thing is gold. And I think that we need to kind of think about that because gold is something that's tangible, it's real, and all of this other stuff is just paper. It's a thought, it's an idea. It's not something that's tangible. And the tangible nature of gold, I think, is the reason why, like in '09, when we saw, and a lot of people say to me, why hasn't gold gone up faster? Well, look at what happened in '09. '09, when we really bottomed at that Dow Jones at 6,400, it wasn't until, I mean, after that, that's when gold really took off. I mean, it spiked, and it spiked very quickly. It went all the way up to about 1,900, and then it came back down as the recession started to settle down, and as we saw housing start to settle down, and then people started to move a lot of assets back into the Dow Jones. We saw it go from, where was it, 6,400 or something, all the way up to, where were we last week?
You know, well, I mean, it was at 35,000.
35,000, and now we're at 30. So it's definitely all over the place right now. But that's a lot of money, and a lot of that money moved away from those stable assets and went back into the roulette wheel, if you would. But I think that once we start seeing people, or even bigger industry or countries for that matter, find that there's going to be some real turbulent times, my prediction is that we see much like history rhyming once again. I think we'll see a quick spike, and that's my opinion. I don't know if you could close on that and maybe elaborate to that a little bit on your opinion, and we'll close on there for today.
I think we go back to the old adage that's always been true, and it's true today. Don't wait to buy gold. Buy gold and wait.
Amen.
We'll see you next week on the Gold Spot.
Thank you much.